Okay, let's go ahead and get started. It's Kenneth Tortoise Capital. It's a follow-up strategy report at the close of the market on 27 February 2020. The meltdown continues. Just by way of recapping, this is where we finished yesterday. A lot of the speculative stocks, typified by like Virgin Galactic Holdings, that we were trading intraday because of the volatility, along, and then 3 bags short and covered. And then that had like a 20% gap down this morning. And so rather than playing things like we did on Wednesday here's one we did in Brazil, where we were riding the slide in the individual indices on the way down, it turned out that with headlines that read like this in the Drudge Report, it was volatility everywhere and everything converging towards unity on the correlation coefficient. So it was really just the market today. So you'll notice that in UVXY, which is the double leveraged inverse VIX, that thing gapped from a close of 17 to an open of 20. So that's like a 3 on 17 is about, that's almost like a 15% gap up. And so on the basis of that one, 10 minutes in, when it crossed the VWAP and started moving up, I bought some. It failed to fail. I bought the second excursion to Z2 on the Z3 pinch around 20. And then I was a volatility trader today. So where that one worked out was those were those two entries, and then a cash at 2075. Next play was I wasn't playing the reverse on volatility. It can be tricky shorting that thing. So I was just waiting for support levels. This one found support down here after it broke through the VWAP twice, and then found support, and then did the RLXD. That was my next entry, back at 20 again with about a 25-cent stop. It made a short move, held support at the PSAR, and took off again when it took out the hump of the RL10, plus broke across the RL90 en route to the 270. Bought the second position at 20 and a quarter. That would end up paying off nicely. Here's one later in the day. I'm sorry, this was SPCE. So that one gapped down from 26 to 20. And so it had that nice sell-off down to 19 and a half. I bought the RLXD, cashed, tried another one. This one ended up getting around 24 before we closed that one out. As a point of reference, I wanted to just show here real quickly on the on UVXY, the kinds of moves that are available in that when the market collapses. All right, so this is UVXY, and we're looking at let me put a little like a cursor window in here so you can see. Right, so this is UVXY, the double leveraged inverse VIX, and now we're looking at a monthly on this one, and most of the time it does nothing but just decay because of contango. But in the last 18 months, 2 years really, there have been 5 months where it was positive. I guess maybe it was here too, but most of the time it just price decays. And I want you to notice that this is the current month, where it's gone from about 15 to 21, which is about a 40% bump lately. And then you have to go back about 8 months, where it went from something like 22 to about 42. So that was about 100% gain, maximum gain, before it then closed later that month, halfway back, right? So that's what you got to know about volatility, is that it spikes and then collapses. So you got to grab it while you can. 3 months before that, it had gone from, again, about, this is about 30 to about 42. So that was about a 30% gain, price over price. Didn't penetrate the dragon in either case. The 2 times that it has penetrated the dragon, you got to go back into end of 2018. This was brutal time in the market here, the Trump sell-off. This has been nothing but a Trump gains all the way through here, by the way. We're going to see that when we look at the chart. But this one went from about, call it 45 to about 95. So that was more than 100% gain, and then had that harsh sell-off as price decayed pretty quickly and volatility decayed. And then the time before that, it went from about, looks like about 30 to about 80. So that was like a 200% gain. So these are the kinds of moves that are available. So this little spike of volatility, what I'm saying here, is nothing compared to these previous 4 excursions. So we're only 3 days into this thing. So, you know, there's more pain coming, is what I'm saying. So this is UVXY now on the daily and the afternoon. It had decayed. You know, it had gotten up to 21 and some change, and then sold off to like, you know, almost 19, and then closed at 21.75. So that's another 10% move from trough to peak. And then my trades, I was a volatility trader all day today. So I had this one. I wasn't playing the downside because it's hard to short. I don't want to get caught in that one. And then the second RLXD and to the RLXD failed to fail further. Now you get higher lows. Buy it. Crosses the VWAP. Buy it. Excursion to Z3 sell off. Cash. Resumes. Buy it. Scratch. Sells off. Watch it. Find support at the VWAP. No surprise. RLXD. Buy it. Cash at the RLXD. Hold support at the VWAP. Buy the RLXD. It was getting close to the end of the day, and I didn't want to get stuck, so I just held to see how it was going to close, and it closed really well. So big day in volatility, and then flat overnight. That's the way I like to play the volatility. So now when we look at the daily report, so this is the 1-day range from here to here. The 10-day range is now stretched from 340 to 297, so that's like a 11% move already from the swing high, and the same with the 30-day. The 30-day high and low has been made in the last 10 days. That's how quickly things can change. And it closed weekly, and poorly, I should say. So this is the new breakdown of the 1, 10, and 30-day look back, and then you have to go back further to find out what 290 connects to. But today we crossed into winter on the MACD histogram 4 seasons. So now we have a short bias because it crossed that MACD 0 line. Support levels. You know, these lines should probably be green because that's the Z3. We're already well past Z3. Holy mackerel! I mean Z4. There's the RL10 fair price. This was yesterday's low. Here's the Z3 excursions. There's Z, and there's Z2. There's Z1 in the skin of the dragon. Monday's opening way back here at 323. That seems pretty long ago. RL270 long-term fair value at 325 and starting to roll over. The dragon has rolled over, the 30's rolled over. You can now see the spine and then the top skin of the dragon, and the RL90 has rolled over. 4 steps into the PSAR flip. There's the PSAR flip, there's Z2, and there's Z3. So that's our kind of our price ladder. We really have to go back a little further to see what else is going on. So we'll do that now. I don't have a daily report to show you right now. The database is still loading. So here's what I want to show. If we go back a little further, instead of past, you know, there's the 10, 20, and 30-day look backs. And that's you can see the magnitude of that sell-off from that swing high around 340 down here to 297. That was a 10% sell-off, so we were officially into the beginning of a correction here. So if I were to clone that, I suppose I could do that. And we wanted to take a look at what a 20% correction looks like. And some guys at the office were starting to worry today, and I said, well, it's probably a 20% sell-off. That's what the next 10% looks like, down to about 275. That takes us all the way back to this dip back in 2019. Then you have to go back further to 250 for that last great big sell-off. This is when that VIX explosion occurred that we saw before. So just notice the magnitude. So one big one, sideways chop, and then the second big leg down, which trapped a lot of folks. And then the Fed started pumping, and then we get all this. And so that's how fast this thing turns. It's going to come all the way back down to here. Let's put that one in uber red. That's around 250. That's where this thing's heading. Now, if that were to happen, that's where I would expect that UVXY to get up around 60. That would not be surprising. Okay. So that should fill us with some trepidation. So that's what we're looking like. Let's. Here's a quick look over at the daily Four Seasons summary. This is sorted by, inverse price. So UVXY, even though that's the double leverage, was only up 24% today. VXX itself was up 16%. The triple inverse Dow was up 13%. This is that triple inverse oil was at 8. Win, surprisingly. Treasury's up 1%. The Aussie dollar had a little fraction. Emerging markets, minus 2.4. Walmart cut. Brazil. We got to come all the way down here to the S&P at 4.5%, and it went into daily fall, and by my count is in the winter. The Dow itself was 4.5. There is real estate was down 5%. So that's one of those where the this exit here on that three bagger on the defensive play is starting to look pretty good. Just saying. And this is that SPCE, that poor man's Tesla gets smashed. But it did close up at 22. So I think there's some more speculation on the long side for people. I mean, to be honest, people that are buying that are people that are buying it because it's Tesla cheap. It's the competitor for Tesla and SpaceX cheap. Let's do a speed run while we're at it now. I haven't adjusted the portfolios on this one, so this is me, preparing my swing portfolio commentary too. So Alcoa, that's in good shape. We got a second position short today, and let's move our stop down, lock it in. Apple, I'm just watching that one. But, that's clearly one you want to be stalking. I wouldn't mind buying down around here. ARC getting crushed just like Tesla, so I don't have a position in that one. The Aussie dollar covered that one today on a little gap up. Boeing, we are 2 positions deep into that one, and we're just going to follow this with our stop. Caterpillar, 2 positions. Just follow it. I didn't add anything else today because I was really exposed on the UVXY, and I wanted all my concentration there. Here is Cliff's. We did say we would have, so that was actually a mechanical entry, so we get that short there because it broke and closed poorly. So that's our, we had 3 in that one. Cut. We got to move our stop down to here, and we got another position short at the gap open. The Dow 30, I mean, geez. Devon Energy. Move our stop down. Emerging markets. Had no position, but we did say to adjust, but we said if it broke down below here, we'd get short. So let's get short. Moving our stop down in EFA. Brazil, Japan, just trading that with 1. Man, oh man, oh man. I mean, these are all the right plays and everything, but Jesus, I hate this. So Mexico, we were playing with hybrid frog only, but I wouldn't have been offended if you had taken that short. We didn't, but that's the way that play looks. I mean, 3 days ago, this was me covering inside of that move and then missing that. Brazil, that's really the short position on the ETFs that we're taking. So let's get all this crap out of the way. We've got another one short there. Man, it's just our world melting. Home Depot, I didn't want to short the strongest stock in the Dow, but even that one's getting slaughtered. The Russell, you could see why that would be an interesting short. I'm playing it with volatility. Completely missed this one in real estate, but that's the defensive sector of real estate. Has given back 4 months of gains. All those hard gains. And then cashed here, that's feeling pretty good. Coal, still short, started to collapse. McDonald's, that was the other strong one in the Dow and just crushed. Oh my goodness. PBW, that clean energy, has given back everything. SCO is that triple inverse energy, so that's working. We've got to move our stop up now. Let's lock that in. S Dow, that's the triple inverse Dow. I mean, so far beyond Z. It started at Z3 and went beyond. So, well, SPCE, just trading at intraday. Simon Property Group collapsed further. That's the commercial real estate. I mean, it's getting kind of boring now. This was the triple long S&P that we took the more than a 1 hour loss on because of the gap, but we're trading that with volatility. Today's candle, and then 3 scoops now in treasuries. Let's move our stop up to here. That feels almost like it's ready to like somebody's posturing for the plunge protection team to come in, so we'll see how that goes. Tesla selling off harsh down to 679, excuse me. UDow, that's the triple inverse Dow. Natural gas collapsing as part of energy. Oil also collapsing now, so we got that short here. Got to move our stop down to there, right about there. UVXY and beyond, only macro. VXX, same thing. This was me cashing it yesterday, right? Because I was afraid of that inverse gap. Yeah, it had a 20% gap in my favor. I'm going to show you what I said about that when we get to the Patreon page. Missed Wiz, but again, that's Wiz now collapsing all the way back. All of those gains from the early days, all that hard work with that AI and that algorithm. This is the problem with they got world-class AI on the front end, but their end period balancing, where they're just balancing monthly, that should tell you what you need to know about the importance of money management and contingency planning. I hate to say it because those guys are smart, but there you are. Walmart, the strongest stock in the Dow, along with Home Depot, getting smashed also. Wheat and precious metals. The defensive play doing this. So that's why you take it when you're supposed to, even though that doesn't make sense. Nothing wrong with that exit right there on 4 positions on the swing. Win stared into the abyss, and we got to cover that one now. If that breaks out of today's high, then that's where we got to go, like right there. U.S. Steel finally collapsed further, so we'll move our stop down to this one. That's sort of a bellwether of that global competitive economy. Look, if there's nothing to the coronavirus, and there is, but if there was nothing to it, you got to imagine that that's like the TSA impact on airline travel has made just things miserable. So I'm expecting a 20% slowdown in global trade just because of the additional contingencies that got to be in place and the costs of protecting, the dissemination of the virus through routine commerce through the supply chain. And that's 20% slowdown in global economy if there's nothing to the virus. But if there is something to the virus, and it sure looks like there is, it gets worse. And, the chairman of the World Health Organization basically said our clown prince of a president is completely ignorant about matters of public health. I don't disagree with that. They don't even know who's in charge right now. He said the vice president is in charge, but the director of Health and Human Services says he's in charge. Complete mishandling of this from the beginning. All he can think about is re-election. Shameful to have a clown at the wheel in times of world crisis. That's the price you pay for listening to a huckster. He and Elon Musk deserve each other. XLB, the big collapse there. Remember, it was materials and energy, so we got a 4th position in this one. Went a gap down. And we got to move that stop now down to here. Energy, further collapse. Got the 2nd position in on this at the open. And just march your stop down to there. Just keep locking it in. Finance, we didn't play. I said I wanted to, but I had so many other short positions that they're all really the same position. But if you're in this one, this is where my stop would be. And then even venerable technology, big collapse. If you're short in technology, then this is about where I'd be, right about there. And oh my goodness, this is what's horrible about all that, is that it just went in, even technology, the leader, just went over the zero line into the winter. So when technology has given up the ghost, and the Dow had the single biggest loss ever in terms of points, that's just where we are. Is there anything in the spring? Let's look at these real quick. Nope. Daily summers. Dow, SPCE, treasuries, the volatilities, and wheat and precious metals. Those are the only things that any good the fall. These have not quite yet gone into the below the zero line, but then you can see everything else. Daily winters, just horrible to see. Let me see if I can pull up that. Hey, here was one from the chat room. This was Frank posting one, and this is the USD Singapore dollar. And he looked at this crossover of this collection crossing the 270, so that was his trigger. And he set this up as his sell here with a stop here, selling half, taking the second profit down there. Perfectly placed. I might have an additional target down here at this PSAR flip, but I really like what he's done here on the forex. This is on 4 hour charts, so that's the equivalent of like an hourly chart on the regulars. So this is what I put on the let's see, published. I just want to cover my commentary. There's some psychology in here. Maybe I guess let me go this one first. So this one, sharing some options thinking with you. This is from Danny, and the way he's using risk managed options insights to structure very controlled risk managed devices trades, and this is using insights about the coronavirus and the battle against the human race for longer term but very risk managed work. So I think that was really genius. So I mentioned before how I got out of the VIX swing position from yesterday, and I had 4 positions in, closed it all out, and then watched it gap in my favor 15%. So I want you to just imagine how I felt seeing that. So what I did was, well, first of all, in the strategy video from yesterday, I told you why I cashed that, and those still are good reasons. And I have plenty of other short exposure, as you've seen, but this is the one that really got away because a 15% gap on 4 positions in your favor. But it was threatening to swamp my boat, and it was getting uncomfortable, and so that's why, to restore a sense of calm in the zero state. So when I felt stupid, here's what I did about that. I still felt stupid, so I just feel my feelings. I just jump right into the middle of it, and I say, yeah, so what? So I've got feelings, so what? Get in the zero state, manage my positions, document the reasons for actions I take, keep marching, and trade the trade that's in front of me. And that got me into those very nice intraday UVXY trades, and then just business as normal. So I don't try to avoid the feelings or change the feeling generator, or just you can't do that. So just feel the feelings and say, so what? And then get back to work. And then I guess I would just say, speaking of work, keeping things in perspective, this one is my high school soccer club team captain. That's a letter of recommendation I wrote for her as she's preparing for her final season as a team captain and getting ready for college. She's going to run my summer camps for me for the community soccer soccer workshop that we do all summer. Just an amazing kid. That's why we do the work we do. I'm very optimistic about the future. That's the reasons we do things. So keep that in perspective, and then it makes it easier to deal with things like feelings and so forth, right? Oh, hey, Frank. Yeah. Let's see. So Samir, well done on that one, Frank, by the way. That was really, really nice. I think you're hitting your stride. It feels like you're taking very measured shots, and I really think that worked well. And so I would say that I think you're getting a good payoff from the boot camp workshop. I really admire the way you're personalizing it and going at your pace and doing the things that work for you. So keep that up. Samir says, just a minute, let me get Samir's question here. See if I can find that. Trying to read this. Hold on. Okay, so Samir asked, for all the swing positions held overnight, do I see any value in beta weighting the portfolio to determine the next net SPY? Yeah, I think so, depending on your your relative exposure. That's sort of what I did in reverse on the UVXY trade. As a percentage of the total portfolio, my spider sense was it was wrong. I think you could go through the math and compute all that. And if you wanted to, you could go ahead and establish the net neutral position so you're not affected um, by the gap at all if you're not trading in the overnight session. So, yeah, I think there's reasons to do that, and especially the larger your positions and the more comfortable you are with computing the variance and the covariance, and then the being able to hedge positions. I think that makes very good sense. So, yeah. It's definitely work to be done. And I think that's easily automated too. Says a guy that doesn't do it in an automated fashion. I just do it by intuitive math. But yeah, that's everything I wanted to cover tonight. I got to get back to work on the daily. I have to reset the database. But I wanted you to at least see the portfolio speed run and the posture of where we are. And, it's still the market and volatility. That's the driver. Keep your risk measured and your powder dry. Thanks so much for your continued support and attention and great questions. You guys inspire me to keep working hard. Keep up the great work. And I agree with you. You can't get them all. So just catch the ones you can catch. Take good care. Keep playing that good music, Glenn. I was listening to you the other night on that great big organ, and just I love your work. Keep up the great work. Take good care, guys.